Going forward, defaulting borrowers will have a tough time finding credit, especially with the tightening of the Credit Reference Bureau guidelines, which were gazetted yesterday. Under the new regulations, creditors in all the 4 tiers, including SACCOs and money lenders, will have access to the credit history of their customers.
Whereas before, the only people or the only entities who would provide your records about your usage of credit were deposit-taking institutions. So if you had an account in a bank and you have never borrowed money, there was no record on you. But you might have borrowed money from a money lender or from a SACCO or from some other institution not regulated by Bank of Uganda. That's one. 2, we have expanded from just financial credit to trade credit. Now that means utility companies, car dealers, landlords, anyone who provides you a service on credit now has the opportunity to start reporting on your usage and your compliance with those terms. So landlords, those who so wish, it's not a requirement, but that option is available to them.
This is an opportunity for especially the positive aspects of a person's reputation and character to play a part in the interest rate they pay when borrowing.
And the one benefit for the smaller borrowers, or for those who don't have collateral, is that your reputation, your character, your past usage of credit can now also become collateral. That if you're a good borrower, that should be enough for someone to make a decision to give you credit, whether it's financial credit or trade credit. This is what the expanded CRB regulations are doing.
Meanwhile, Parliament also passed the amended Microfinance Deposit-Taking Institutions Act, which will now bring large SACCOs with operating capital of 500 million shillings and saving in excess of 1.5 billion shillings under central bank supervision.
Deposit-taking institutions, registered societies regulation for 2022. And it is being put in place in response to an obligation that was placed on the Bank of Uganda under the 2016 Tier 4 and Money Lenders Act, Section 110, okay? That we are supposed to regulate large SACCOs, okay? So one law gave us the power and the mandate to regulate large SACCOs. But we didn't have regulations under which we would manage or do that regulation and supervision. That's what these new regulations, which were published yesterday, gives us now the power and the terms, and clarifies what we can and cannot do with regards to large SACCOs.
With inflation rising and tough economic times biting, the central bank gives no clear picture on when all will return to normal. Rachel Nabisubi, NTV Business.